Hey, what's up, guys? What's up? Smash that like button, friends. Let's go. Sorry, I had my mic muted here. Welcome. I was just kind of talking about how much of a nerd I am. That's me doing math in the middle of the night. I'm saying there's people that do like these, they're called threads on Twitter, where you just post like a bunch of posts right after the other. And just like people do it, it's like clickbaity. People do it to get like you to get more engagement. I've done threads that got like 50,000 engagement. It's 20,000 followers, like 2 or 3 times to one. What's up? No audio. What's up, Bang Bolt? Matt, just because you know you're on mute, sometimes you forget you called it. There should be a prize for those of you that call. You being a numbskull here. Music a little louder. Turn it down a little bit. Okay, that's looking good here. Looking good here. Looking good here. All right, let's do the analysis here. Get our overnight going. All right, pull it. Go in your Discord every single day. Get up the dynamic hedge pressure. We got 7 minutes till we start. Put it up here. We have 39 and 24. Before 94. So by the way, today I'll be trading Elite Trader Funding now. So we work with these guys. They're great. Trader Funding Program. Some buddies of mine made that company. And it's like everything else on the exploration to see if the property. And I'm still trading the options plays I've been doing. So we'll be doing both today, options and futures. So you get a double dose of all things trading. But Elite Trader Funding, they're running an awesome special. It's up to like 70% off. This is cheap as I've ever seen it do. I'm not dropping a promo code or anything to get any cutbacks. I'm not getting anything from telling you guys this right now. They have a special. It's like 70% off. I loaded up on like 10 evals just to try it out. I've been just doing Apex just to try it out as well. And when they reached out and they're like, hey, we're doing this thing, and I'm like, oh, well, I'll check it out. So we officially kind of like support them because they're a cool company, and the people. 992. Some of the folks that are like their community managers and leaders there, either have been like friends with me for many years. Some of them used to work for me actually, a long time ago, and they work in like their customer service and moderation team, and they're awesome folks. 892, 19034. So when it comes to like, is it a trustworthy company? These prop firms are always like, can we trust them? Did they pay out? Blah, blah. That's a company at least I could say that I trust that the people are quality people. Now, we'll see if they pay out or not like any other prop firm. I'm sure they absolutely do, but 18931. But of course, we should, jump in and check it out. So they're doing a massive sale, like a super cheap eval. So I went and grabbed a bunch of them. Lifetime discount. You guys got one more day of that. That's just that, and that's only if you guys qualify for the game we played. I said if I hit my 468 target on Qs, and I thought I was gonna make like 40 something grand. I closed it out right about 30 on the trade. But I would give people that bought. Am I still in the Apex accounts? I am still in the Apex accounts, but I do want to support my friends as well. Excellent, you guys. Welcome to the crew. All right, and this is a fundraiser, so you guys for the lifetime deal, and then we raised a significant amount of money, and we're gonna go hire, like I said, for the new Zoom calls and everything. We're gonna hire 2 new developers for the platform. So, guys, welcome to the chat. Plus, we also are like getting you guys to test out the new claim feature at the same time. and also forcibly moving you to the new site from the old site. So there's also some secondary motives there to get you guys out of the old site. Well, VIX break out today. Let's take a look. What we need to look at that. Hold on. Oh shit! I need to log in, Thinkorswim. Okay, don't go anywhere. Oopsies. Hang tight. Hang tight, y'all. It's a one-time thing. So we don't ever, like every once in a while, rarely will we do some kind of lifetime sale. And we're doing a capital raise. Right now, I'm actually trying to raise money for the company in general. $15 million. So we'll have to generate that some other reason, some other way. I'll think or swim. Stop being so slow. All right. I can check nothing's in the way here. Will VIX break out today? Let's take a look. It's hard to say. It was really hard to say today. I still think we got a retracement in front of us. Still likely possible. 584 way out of bounds here. Nasdaq is right about 266. We're gonna draw that red line here. 266. Going red. Okay. All right. Hit lower DD band. If the DD ratio comes up less than half, it can become problematic there. I'll be looking at some calls for next week though. As long as VIX plays ball pretty good. 13. Oh wait, hold on. Today the 4th. Oh, today's the 5th. That's right. Okay, 462 retrace. Let's see if I got that coming anytime soon here. Okay. So far, my drawing tool here. Still getting used to my whole zoom style here. I'd like to see DD band hold at least for now. We're below monthly hedge for sure, which is pretty bad. This is not the best. Whereas any break of this is very bad. Bad on this end. Whichever the DD ratio being less than half is. What's a lifetime discount? Don't see a flush out announcements. If you were there and you bought the new package, the rule is this, and those of you didn't do this, a lot of you didn't. Rule was this: if you ante up, you had to have canceled your membership from the old site. You have to have bought this membership here. We had like 50 people sign up, you guys. It was like crazy. Oh God. I can turn that shit off. Okay. This one always blows my eardrums out. Swim. Volume. Mute. There we go. Bye. Okay. All right. Wait a minute. Let's take a long. Hold on. What is this? Oh, wait a minute. Okay, let's look at the liquidity maps here. Right out the door. And close to SPY hedge break, so I like to take the bet that SPY hedge does break. And so in here, typically on these, you're gonna have a little bit of resistance. Okay, resilience is greater than 0. That's good. Traded there. I always take a little bit of a break to trade to there, and then I close out. That's my trade today. I'll chase along in the hedge break. Looking pretty solid there. QQQ and a kind of a I'm an icky boat, but QQQ at least to fill the gap. We'll see if that works out. Okay. Oops. See if we get something right up in here. Do I want to take a small long on NQ? The problem is that you have bear zone right here, so it's kind of like right in the middle. But yeah, I think the long trade to retrace is still on the table. VIX is likely to break MHP. It's on the cusp there, but VIX, at least Nasdaq to here. It will have bear zone resistance though at first. That's the problem. Resistance. And then of course, any break to here, it's kind of like random at there. You know, liquidity pocket, I never bet past that. So high of day probably there. On YouTube, smash that like button. Let's go. Let's see if I can get this up to like, you know, I think a little bit more than All right, I got some 462 calls. And I'm going to close them out right at bear zone, which we just did. $3,000, and we're done. That's it. $3,100 profit on those options. Woo. Done. I closed out. There you go. That's it. Here to bear zone. Take that trade. Resilience is positive. And let's try some futures now. My mic is low? Wait, it is? How about now? I grabbed calls right at the open. Build a gap, I closed them out. Got some 0 days, here to here, 3 grand. Better? All right, cool. All right, let's look at as far as day trading goes, I don't know. It's kind of hard to say on this one because the resistance is going to be right here at the bear zone on Qs. Like I said, I took a quickie scalp. That was for 3 grand, not big. Right here. Oops. Day trading, I just do quickie 0 days. Not too big deal. Oops. It's really going to be hard to day trade this on futures, though. There's really not a good pathway for this to go up. Pretty quick. All right, so I don't know about futures today. Good deal, good deal, good deal. That's a quick one. Jonat. It's fast. That was quick. All right, I know I have to do all my silly socials here. Chat. All right, cool. That's it. Oh, you said to forget. I'm so bad at social media. I don't promote myself too much. I just, you know, we've pretty much like grown via word of mouth more than anything. All right, so there's that gap fill. So what we do is like when resilience number is greater than 0, which is this is the gap fill predictor at the bottom. Right, it's greater than 0 right now, so I'm not too excited to be long at this point unless this goes above 0, and then we just fill the gap. I kind of got lucky on that one, and then the Nasdaq resilience. Let me see if I can't get that one up here really quick. It's at the top of the screen is definitely positive, so that's why I took the long on the Nasdaq. Right here, this number being 51.47. Anything greater than 0 means that we pivot through here. So right at the open, I just jumped in on the long. That number was nice and lovely and positive. And so I just filled the gap from here to here. That's a predictable gap fill scalp. I grabbed some 0-day options. Like I said, it was worth about $3 grand profit. There is resistance on bear zone, however, and typically DD greater than half is pretty good because sometimes you actually go through and you clean out this right there. So let me draw this the way I was trying to draw it. High of the day can be kind of like that. That's the interesting part. SPY is gonna have a similar setup. And VIX is kind of sitting on a bull setup. And this is why I don't want to long any further than here. VIX is in a cautious state. So like the liquidity maps on VIX, if you look, you can see how VIX has potential bounce points on MHP, and I always worry about that. VIX holding this means the volatility can be imminent. So any upward push on the index could drop very quickly. So I don't normally take it other than that. Friends on YouTube, smash that like button. Let's go. We made pretty decent profit today. Actually, change my title here because what is 39,806? This is just doing options today, this week. 42,753. All right. Told you guys I do something fun. Y'all have been egging me on. I told people I'd take a modest amount. Just show you how to day trade some options. I said I'll take like 10K to like 100K. People are like, go to 1 million. Okay. So we have to do like a little variety here. We can trade futures all day long. Like I try different things so people can see like different techniques apply different ways. Right here, we use our liquidity map. This is showing me where the order flow is, possibly. The fact that VIX can bounce right there is very cautionary for me. So the idea that VIX can go up means the index can likely become like more choppy, volatile. So on that note, any upward pushes on Qs, I had 462s. If I would have held on to those, it would have been like an even nicer little run. I probably would have made about closer to 8 or 9K. But again, once we filled the gap, I got what I needed and called it a day. As I drew on NQ, this is likely the high of day, but again, I'm not shorting this. So today's rule, no shorting, right? I never short on anything that looks like this. This has pressure towards the middle. And then of course, if we tap against here, I always bet on a break, but essentially there's no resistance here. So remember, BSU, we do not at all short this. So this is definitely a long setup today. I'm not gonna take it any further probably on this one. So remember, wake up, then short it, let the market do its thing. Go to futures here. I'm trying to see if there's anything. Futures is not really much of a good setup. These are upper pivots right here that I'd be looking to kind of like walk away from. It's probably the extent of the good long trade today. Double check that we don't have any news coming out today. Friends on YouTube, what's up? Welcome to the stream. You want to watch me on my journey to 100K or 1 million if people keep telling me to do that? Would y'all like to see that? Fully transparent, all that good stuff. All right, today, talk about the jobless claims really quick. Continuing initial productivity in non-farms. Important. Global services PMI comes out in 4 minutes, so we might get a nice little run on the market to the downside. Talk about why I don't long up against these pivots right here, especially when VIX can come down. There's usually resistance. That's that resistance I drew. This is SPY and S&P futures. Once you hit that kind of upper area on NASDAQ, it starts to pivot around. Y'all know this rule here. Pull this up. So on the new liquidity map, those of you that are in the Zoom call package, I'll tell you, we're doing this thing to raise money for the tech company here. Like a Kickstarter, but I'm doing a Zoom call every day. Everybody in chat, type up something in YouTube. If you can't help me out, Zoom friends, go to YouTube and tell people honestly what you think about the Zoom calls we've been doing. It's totally different than anything we've ever done before. But let people know it's not just like another thing of the same. It's all new stuff. It's like my actual strategies I've been using all my life. I've never told people my actual strategies. I give you all possible strategies and let you learn how they work and choose what you like. But these are like my favorite trades, how much I trade, why I trade hard, especially. And I told you guys I would execute my favorite trades, an options account, and show you how I do it. I'm gonna day trade options, swing trade options, show how it works. Bear short up, has pressure all the way to hedge pressure, and I'm more likely to long on the break than I am to short this at all. This resilience number being negative, however, is not a sign that I like to take for the long side. Resilience tells you around this side of the box more than anything. It's kind of fighting there. DD ratio is back to bullish though, so if I had to make a choice and somebody put a gun in my head, I would take the long side trade off of the open. If this were to fall right here on the data in 2 minutes, PMI is coming out, I might be more likely to grab the dip, stop at lower lows. But I don't know. I'd be over trading if I did anything. If you missed it, can you qualify? If you missed it, it's gone. As a matter of fact, I told people I'm going to give you till Friday. I'm changing my mind. I'm giving you until the end of the day today. That's it. So the rule is you had to have signed up. When I told you to sign up, you had to have been present. It's a treat for those that are always here and present. So it's not a discount that we're doing for everybody. We're going to check. So essentially, you had to have bought the membership on the new site, canceled your old membership, so to move over, and you had to buy the full monthly package. And if you did, and I said if my trade took off, I give you a discount. If you were there that day, that's it. So how do you guys in the Zoom world, how are you enjoying the new Zoom calls? Can you go let people in the YouTube chat, let them know what they're missing. You'll give like an honest review. So I still think we're going close to north side here on the S&P. We get the data coming out in just a hot minute here. So I still want to get a long entry for the retrace, but I don't really want to just bet this really hard. These are only 100K static, so I can only lose 625 on this one, which means a little bit over 10 points. 13 points, that's it, on one contract. When we watch QQQ, IWM, all of these together, QQQ has hit that target. That's kind of, oops, that's not the drawing for it. You guys remember from today's sesh, I wrote high of day here. If this tapped for any of you, I always look at this. Anytime you break from bear zone to bull zone, that's typically the high of the day. If it breaks from here, it likely is going to go up. And I usually chase along on hedge pressure break. But in this particular case, I'd be more willing to like sit out than I would wanting to do anything right here. It's a sit out range. Sit out. We always say liquidity pockets are random. More random than anything. Well, everything's random. So I'm sitting out here. Likely high of the day, which is exactly what I wrote this morning. Resilience greater than 0 pushes to the top of the box there. That was my trade. That was a $3,000 trade on that one. We've been killing it. This has been a fun, it's been like a fun couple days. DD ratio is greater than half, so that's actually good. Okay, we got the data coming out like literally right now. This is the global composite PMI, services PMI. Let's read the data pretty quick. Again, could be random. There's no shorting on this setup today. There's a 0 short day, so nothing for me is going to be short. All signs are bullish. BSU is the most bullish the most bullish one that we have. Even up here, it's still very bullish. Even though this is the projected high of day, it doesn't mean it can't keep going. So no shorting, right? You guys know my rules. I never short BSU, not once. I trade every one of these long right here above. Now, if it does come down, it likely comes down, but support is going to be inside of here. So no entries or exits for me inside of here. My first question is, do I actually want to take a long from here? The problem is that VIX has a couple of balance points. So the risk is kind of high that the market does go the wrong way. If I do anything, normally BSUs I trade pretty heavy. I would trade this really small because going from bear side to bull side break is not something I always get excited to chase, but I do find every use to be a bull if I can. Okay. Initial jobless claims coming down, which is good. This is your layoffs week to week. Slightly coming down, but less than 2 million is pretty average for the history of a bull market. So nothing alarming there. Job market's pretty healthy. Continuing jobless claims, again, this is pretty common range, so nothing alarming there. Jolts coming down means people are hiring. Hiring spree, looking good. People are not getting laid off and people are filling up these jobs. The non-farm productivity, excluding the farming industry because it's subsidized, right? Productivity and labor inflation directly related to drop in productivity, blah, 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 blah. So productivity is high quarter over quarter, which is good. You'd expect productivity to be high in a bullish economy, productivity to be low in a recession. Let me just walk you through a couple of those pieces. Clearly, in the COVID world, you'd have lower than low productivity. This is what I call like the Zoom era of the work life. Everybody's working at home from Zoom in 2021. Nobody was getting shit done. Nothing was happening. So, back here, productivity kind of low and crappy. We're back to being like, 2.5% growth quarter over quarter isn't bad. This is what you expect in a good bull market. Trump era bull market here, 2016 and on, these nice, good readings quarter over quarter is greater than 2.5 every time. So this is a strong bull market in general, or productivity at least is reflecting, lessening inflation, other things. This is pretty much on par, slightly above 50, which is good. Showing growth, purchasing manager side. The services PMI greater than 50, that's seen as good. So maybe we've seen growth since, June of this year, greater than 50. I mean, this 55 bump is pretty good. So economic data is looking great, you guys. There's not really any kind of nasty bear signs on the market front. Jerry, I love you, bro. I've been a lifetime member. Jerry's been here from, geez. Were you from like the 2019 days, I think? Yeah, I know it sounds kind of like we had lifetime and then it's like, we're like, we're going to do another thing to raise some money. And it's like, what's like, why? I mean, it's a lifetime. Like, yeah. So like me doing like my own thing to additionally raise money. It's not like we're adding a new service to Rocket Scooter. What it is like we're doing a second thing to raise money. We're doing 2 capital raises here. We're doing a $15 million Series B for the tech company, for the marketplace. We're trying to become this global marketplace thing, and we're doing pitches, and it's fun, man. I've been having a blast doing this. See, sit out. Look at it right on the screen. Sit out. I don't do anything in here. I don't chase the long. Leave this alone. What do you see morning trigger you to buy Frog Dog? Easy. Resilience is greater than 0. It predictably is a high probability trade to fill the gap. So the gap is this white box. My trade from today. See right here. We have 3 major tools that we use. GD ratio up at the top. This is the bull bear ratio. Resilience, which is a gap fill predictor that spans this box, and then liquidity map. So we started off this morning. It was a BRSU. So let me pull this up really quick and just show you what that is. So the code would tell me this one. Bear short up, which means there's pressure that pushes between these orange and blue lines. Okay. So let me just kind of draw that over here. There's pressure that pushes between these orange and blue lines like this. With the note is that the bear zone typically is resistance to that movement. So there's a particular trade setup from there already. I don't normally span through these pockets to get to the blue line in this case. So just drawing that, so far so good, right? DD ratio has a rule. And actually, let me pull up the rules. I'll show you. If you guys are in our program, we give you these cheat sheets. It's so easy to learn this stuff because it's on these cheat sheets. 3 indicators. So let me pop it up. Liquidity map is here. Resilience is here. That's order flow predicting. This is gap fill predicting. And then you have some arbitrage between the index and the stocks inside of it, right? Bull side. So right here, we drew this guy. The code was here, which tells me there's pressure from here to here and here off of that. Take note, BRSU has resistance from hedge pressure, which is why you're seeing some resistance from hedge pressure. but you always pull that resistance to the nearby support. So we're drawing some lines here with some possible trade flow plans. We see that so far, and both of them actually kind of played out. Oops. Why did you do that? I hate Windows sometimes. Okay. Well, number 2, resilience is a predictor of the gap, right? Direction. Some of the stocks, if resilience is greater than 0, which is this line right here. This is just the S&P. NASDAQ's was like really good and positive. Anything greater than 0, as you see by the key over here. Inside of the box pushes to the top of the box. Does everyone see this right here? So you can draw a line from here to there. So far you have flow from there to there, which is trade I took. You have liquidity map, which is the first one from there to there. And then the last one is the last piece of this is DD ratio. And again, I just draw the lines on the chart. I'm the guy that draws on the chart, makes the trade. Draw it before it happens, makes the trade. I wrote high of day here on QQQ because typically it's rare. Now, it doesn't mean I'm going to be right or wrong on this. I just plan for this to be the high of the day for me. It could keep going. I'm not shorting off the high of the day. It's just whenever you break bear zone and hit bull zone, I usually walk away. In this particular setup, when DD ratio is greater than half, which it is, I look for if the liquidity map open is bear, which it was, bear to bull, tap it, pull it back. So that's the highest I look for. So that's a possible flow path as well. So bear to bull, tap it, and pull back. Okay. So let's add it all up. When I look at these pieces, if you notice something pretty neat about this, is that all 3 of those indicators have confluence, or they all point up right there. Everyone, yes, in chat? See that? They all point up. Resilience is pushing that way from here to here. DD is pushing that way. So this leg is common to all 3 things, and resilience is there, right? And so I just took the long right out the door. Frog, does that make sense? So if all 3 of the indicators are showing me flow path and all 3 of them line up, they're all different. They all look at different things. Then I just took the long right out the door. Normally I would have closed right here, but I gave myself a little bit more room to close right there. I took the common flow path, and that was the leg I took and closed out on was actually common for 2 of them. You all see that? Does that make sense? So essentially I take my 3 indicators. When they line up, dude, I just jump in and grab it. I grab it quick. So I just long right out the door. Now, what do I do here? I'm more often, at this stage, I'm more likely to long the market from here than I am to reverse it. So the problem with this kind of setup is that from here, it is more appropriate to bet on a long with a stop below here. If I were like trying to retrace this for next week, let me see if I can get this. If it does break, I'm gonna take a long swing for next week. We'll be looking at I didn't even do the retracement here. I don't know if I really like that idea, but this would be about 468, probably the first pivot. We'll do 467s for next week. Okay. I believe in it that much, though. Let's say 467 call. Expensive. Let's do like... Wait, today's the 5th, huh? Can do... Oh, I'm gonna give it till like Monday. It's not gonna take 3 days to get there. Hmm. Do I want to bet on that bull zone bounce? I always take hedge push or breakout with a normal setup here. No, I'm not going to take it. I usually chase this with a long on futures. I will. I do like. Let's do like maybe some micros. Asia chase is a pretty normal size position. No, I don't want to. I'm talking myself out of it. Look, I forget that we have resistances here. 19081 is a very strong, we call it yellow line resistance. It's been fighting it a lot. I'm not going to bet that we break it today. I'm not going to short either. So something about this just feels suspect for me to take the long here. I might miss out on this leg, but the bet is if we were to retrace this, this would be one daily range from here. So like if I were to get options just to be safe, just so that the decay is not too good, I'm just going to day trade it up with like I'll put like 2 or 3 grand in, try to make 500% on the move up. This is not a 5-day move. This is a 1-day move if we get it. Problem I'm worried about is do we resist to have one more red candle back to the spare zone here, and then it finally pops and closes out. I think like days like this, if they don't retrace within the 2nd or 3rd day, it's not going to happen for a while. And so let's look at the monthly maps. I'm scaring myself out of taking that long. I don't know. Monthly maps are still garbage, guys. Through October. Tesla broke MHP. Oh shit, let's go. Tesla's super bullish as well on the LM, so I don't hate it. I think SPY is the one I think has better room to move though. This one, SPY is the one that's kind of like lagging behind everything. Little turn right here, right at the 9 o'clock candle, a little pullback. Yeah, I'm talking myself out of doing anything. Update the yellow and red line chart. Yeah, I'll do it. Okay, so here we go. Here's how I call the downside. I'm gonna do the same thing here. Bear side. I'm still in bear zone, and that's the problem here. If we hit that retracement target though, oh, I'm gonna short the fuck out of this thing. This is all bear zone. Nasdaq just has bear sludge to get through. That's the problem. That's the problem. So I think what I'd rather like more aptly do is just wait for the retrace, and then short off the top. All about that one. So choppy weather for a little bit. So I'm not shorting this today at all. You guys see how I did that? I was actually contemplating taking a long, but I didn't do it. So the S&P is a little more stable. We talked about this yesterday, and the S&P is actually starting to clean itself up to actually be more bullish than Qs. So the S&P, as we talked about yesterday, was showing flat, and now the S&P monthly maps are showing nice and bullishness. The S&P has a lot of power from here. So maybe I should chase the long just to get the retrace. Upper DD band right there on Qs. That's the first resistance. We are breaking through this, so at least. Let's look at spies. Where's that at? Where's that bad boy? About right here. It's about 555 is a strike on spy. Let me do spy. I will do spies on this now next week. I won't get as much off of it as I wanted to. We're gonna do 555. A day like this is just gonna run. Get them for next week. Let's just be safe on this. Avoid a little bit of theta. Let's do Tuesdays. That's only about 50% though. 555 is not far from here. That's the problem. I want to take calls to it. That's the thing. This bear zone balance on IDVM present precise as hell, Matt. You only have about 45 days on the platform, but they've been your best trades. PJ, bro, I love it. You don't see that? See the commentary. Love it, man. Appreciate you, dude. Okay. This is the problem. S&P does have... This is pretty strong. This is a good contender for doing that. What if I just 0-dayed it today for fun? And I just bought like, I don't know, 30 shares. 30 contracts. So nothing just too crazy. $3,000. VIX is decay. Let me double check VIX triple B's here. Just to bet that we retrace fully. Now we're still above here on the overshoot. I should have chased the support break, but liquidity pocket here I think is a good setup. Hedge pusher break I usually always take to the long side. Pull it back there. Do I want to touch it? Today though? Okay, I'll do it. Okay, I'll take the long, but I only put $2,000, nothing big. So I'm playing with profits today. I'm gonna take the long that we hit 555, which is to retrace the red line from the last move down. I just put $2,000. I'm not going heavy on it. I've convinced myself to take it. Normally I would long at hedge pusher break, but we do have that resistance here. Liquidity pocket will probably push to there because DD is greater than half, which is almost like a couple ticks shy of this 555 level, which is the red line with the big nasty sell up that we had. So I'm in the long. I took it. I just got, again, 0 days. That's for today because we're close enough. I just put 2,000 into it. It'll probably make 2,000 if I'm right, 2,000 if I'm wrong. If I still lose that, I walk away with, you know, 1,000 for the day if it doesn't work. Thank you, hitting DD now. Yeah, so I'm betting on all right, it is an upper limit on DD. The issue being that NASDAQ, SPY is the stronger of the two. So my thoughts are we're close enough to get there. Well, the question is, do I want to set up for puts for next week? I don't believe we're going to hit it and keep going. By the end, like if we have a big green update today, remember it's the end of the day whenever I decide to buy puts. So what I'll do is, Puts I bump out a little bit heavier. So we'll do next week. And 13. We'll do. We'll pass right back through the breakout high of today, 553. Next week. It's $5. It's too much. Retracement will be a quick thing. Oops. Yeah, that's what I'm saying. SPY is bull zone on monthly map, so yeah, no futures trade on this one. This is one of those ones where these just options trades today. Do you guys like the new emblem in the back? Y'all like that? Zoom calls. Oops, Zoom crashed. Y'all like the new thingy back there? Oops. There you go. Sorry about that, guys. The Zoom crash. There we go. Question is, do we retrace today? What is the thought process in deciding options at a futures? Frog, we take I'm gonna be teaching that this week in the Zoom call. You should check it out. Like, I'm gonna go over trading options. It's like the next step of the training that I'm doing. You guys should check this out. Look, do this for a month. $67. Check it out, and just come to the Zoom call, and we'll walk you through it. Options a little different than futures. Typically big fast moves I like to take like a like a fixed risk trade. Oh, you get the lifetime? Yeah, I'll cover it today. It's a little bit more of a complex process. Something like a big sell-off that retraces. If it doesn't happen, probably today it's not going to happen for a while. So the thought is like, okay, I want to, maybe I can try to get to happen today. Bear zone obviously is a resistance point on the S&P right here. So I one hesitation. Becomes the one problem here. Do we retrace this up? S&P had that clean look, but QQQ is just the one that looks like garbage. Like I can't like wrap my head around it. So I like here it's like, yeah, I hate trading through that. So usually here with a 1 strike stop is usually the trade I'll take. Okay, let's grab it. Let's bet. Let's make the bet. Let's have some fun with it. Come on, get back above. 42,753. It's 3 days. 3 days of trading. Crappy thing is that res is less than 0 now, so that's not good for the setup. Problem is that this is kind of a tricky one. Problem is res less than 0 and wants to be below there. Res greater than 0 wants to be above there. QQ is much stronger than SPY. It really is. This is a QQQ hedge pressure bounce. So on this one, this is the second support for Q. So this is the support if there is one. But man, that little nosedive that we just had, which is a VIX hedge pressure test right here. So VIX hit a bounce point as well. Let's see. Show you guys a couple of things. So this is a pivot point in VIX. VIX tapped and pulled back. If VIX is back above here, then the market's probably going to pull back. If we don't get this retracement today, we're probably not gonna get it. It doesn't usually bounce up 2 different days and not work. So this is just to retrace the downward move from last time. I doubled up on my long. I got 555 puts. I mean calls. In the S&P, just to bet that we retrace. This is the place. Real quick. This is a trick that we teach. Where's that target? Again, it's probably not the best trade though. We'll check that that's the right spot. Actually, no. It was on futures. Wrong place here. Okay, so Q starts right at about 8:15 in the morning. Yeah, so right at the top. That's basically the retracement area. Yeah, right about 5:55. Usually don't spend 1-2 days and then the third or fourth. I mean, you don't usually spend like 3 or 4 days here. If it makes 2 attempts and fails, is very likely to fail. So I'm still betting that it happens. I think that today's DD band ratio came out pretty good. The problem is we're bumping into upper limits in futures. DD band is always a resistance. There's a yellow line in NASDAQ as well, which is creating that resistance, right? Usually, yellow line's what I shorted on last week, and this is why we're seeing a little bit of resistance. It's going to take probably about the next 10 to 20 minutes to figure out what it's going to do. But within the hour, if it's not back above here, then it's not going to happen. If it falls, it'll fall pretty quick. Volatility is still pretty high. I'm optimistic. This is just a technical push off of that upper band. We all know how that works. Am I betting that bull side holds? I am. I always take bull breakouts. I do. So this is like where we are here. I got in to bet that we just retrace. On NASDAQ, that retracement is similar spot. About right there. 465. Matt's favorite short is a bear bounce down. It is. That is my favorite short. When you open in a bear zone, that is my favorite short, yes. Now, let's talk about this, right? The reason I'm not shorting, talk about this in the class, is because anytime that you're short, remember the rules. Anytime you're short, you guys remember, say, like, if I'm wanting to long or short, if I'm long and I have confluence, I take my normal trade. If there's no confluence, I step down to a smaller trade. If I'm short and I lose confluence, I don't take it. So the DD ratio here is greater than half. I only short that when it's less than half. The opposite is bull case. Bull case, even if DD ratio is less than half, I'll still long. I'll just take a smaller long. So the way that I short is different than the way that I long. Everybody follow? It's a little different here. You guys remember? I don't know how that goes. The question is, breaking DD band would be crazy. This is resistance. The hardest part with today is the Nasdaq resistance. So that's the problem. And Nasdaq is kind of like the worst of the two. Betting on the DD band break is hard. This is hard resistance. Hard resistance. That's the problem. Ratio is greater than half. It means it's preferentially wanting to go to that area. DD greater than half also supports bull zone. Right there. The problem is this is a really kind of a gamble. It's like, if you break, it's going to have the velocity. It's going to just nastily go. It's going to be crazy. If this breaks, it's going to be green and solid green for the day. That's the one thing. I'm excited to see. Abby, what's up, dude? I remember you. How you been? Abhishek? From the old days? Dude. Been a while, man. You been good, dude? Awesome, bro. I love it. This is a harder trade to fathom. I remember, you guys know my rule. I always find every excuse I can to be a bull. I don't like to short bull territories. You guys remember the rule is, right? I take hedge pressure breaks. I long them. Blue hedge pressure, I never short off of. I always long against. When it bumps against it, I always take the long. I always chase the long. We have bear zone right here. That's the problem. DD ratio is greater than half, so I don't short the bear zone. Shorting and longing are completely different. So I've revealed all that in the Zoom call. I want you guys to sign up. We've been giving, like, if you guys read the comments, dude. Somebody said it's like striking gold in the stock market. That's really cute, man. Love it. You guys are awesome. Even with the 100-something people that moved over to Zoom, we still have almost 100 people watching the show on YouTube. That's like really exciting for me. Thanks for supporting the group. I find every excuse I can to be a bull. Let's get that retrace. 555. Let's see if we get it. The problem is this is hard resist right here. Very hard resist. Let me shape it for... Nasdaq is the hard resist at the same spot. So let's keep an eye on proxy trade. I always watch the two together. Nasdaq has a pivot right there. There we go. There we go. Let's roll. Bull zone support. There's that hard resist though. The break on Nasdaq. Let me get these levels front and center just in case I get it. Keep these monitored over here. Actually, it's 465.8 and 555.27. You guys want to write down some numbers. These are it. I'll write them for you. Thanks for tuning in every day. Love you guys. Is anybody's first time here? All right. I'm up 10%. Let's go. Missy Massive, what's up? First time. Awesome. Jose Vila, first time. Hey, first timers, what's up, you guys? All right, cool. Welcome. All right, love you guys. All right. Wish me luck. So the rule here is I take every excuse I can to be a bull. Now, wish me luck. Let's just see if I'm right. This is what this does is predictable flow path based on options. It's basically essentially giving me a little bit of a guide as to where flow can be. In this particular zone, it's telling me right now the next range of flow is going to be from here to like there. Yeah, it's kind of pointing to the middle. The middle is the first thing that it did. It's kind of supporting there as well. We have a rule that states if this number is greater than half, this move wants to happen. We call it DD rule. And we have 3 different major indicators that we use. They're all arbitrage tools. Pretty easy to see. This is tracking how much the SPY is lacking behind the stocks. Stocks are bullish. That's greater than half, and the SPY is likely to be bullish. So in the bear zone is likely to tap that bull zone. More often than it's not. So anytime I touch this blue line from the bottom, I always chase the long. And now I'm going right to there. That's rule number 1. Rule number 2, this white line greater than 0 is pressure from here to the next pivot, which is there to there. There to there. So that leg took off that rule. This is the top of the box rule. And then the liquidity map shows a liquid market. Liquid markets, guys, don't crash. We always talk about that. There's the upside. Here we go. Here we go. 26%. Let's run it, baby. You folks, I'm gonna give you a shot. I want you guys to come. Do me a favor. Come to the Zoom call. You guys are gonna learn a ton. And we did this thing to attract some new folks. We built this trading platform. We invented these tools in it. You guys check this out if you've never been part of it. This will be the best. We're doing a revenue drive to hire new developers. $20. Like $20, you can like learn everything we do this month. Just hang out. There's hundreds of people in the Zoom call. A lot of people in this YouTube as well. We're in a Zoom call right now. You guys, Missy, Abby, you need to jump back in, Abby. You were building it from scratch back in the day. Jose and Missy, just come to the Zoom call today at 3 Eastern, which is an hour before market closes. And there's like, we just started this news called 20 Days to Profitability Mindset. What it is 20 days is a magic number in the stock market. Trust me on it. The first video will tell you why 20 days is it. It says if you can survive 20 days, you can survive in general. What's so special about 20 days? We talk about the probabilities of some edges in the market. So the idea is if you can survive 20 days and you're still not making money, then the only thing you need to change is how you bet. And then there's like a whole strategy around betting. And that's what we're teaching. And I want you guys to check it out. Come today. If you hate it, like I promise, come today. If you hate it, we'll give you your $20. We're doing a revenue drive right now. We're trying to raise $6,000 a month to hire 2 new developers. 3 p.m. Eastern. So we're doing a whole new series. It's 20 courses for 20 days. It's the whole methodology there. Yeah, you can join, bro. Like, there's the link I posted above. Just sign up for it. But you guys will have I explain why is what we do, and you can catch up on last week's 5 videos, which go over all of this, right? So, my current long trade right now, Oh god, I'm terrible. I did my mouth, so I fucking fat fingered this one again. I didn't mean to dump so much into it, but this one's up 3,000 already. I thought I put. I'm so dumb sometimes. I meant to put a normal size trade, but this is definitely bigger than normal. Let me trim it a little bit. I'm gonna take that much risk. Oh, where's the link? It's right here. And so we built this brand new marketplace. This is a whole new thing that we did. We built the trading platform. Now we build a marketplace. I don't know if you guys have seen it or not. Check it out. We built a marketplace for other vendors and other people and community members to be part of it. You can search for anything that you want, you know, day trading. You can find a ton of really cool people that have businesses that can check out and buy their stuff through us. Marketplace in general has different categories, Discord communities, things like that. My page is here. You can read reviews. We just launched this last month or July, like hard launched it. And then so you can see all the stuff that I do sell. So we made this like modularized website for people to actually set up their stuff. So this is our new thing, the marketplace. And right now we're expanding beyond finance. So this is the next biggest thing we're gonna do. And so look at me, Matt. There's me. Oh, it's so cute. And then these Mavic courses. There's the 20-day course. This is the one right here. Game the system, masterclass, yada yada, and all the pieces are here. This is the Zoom call. So you guys do that. I promise you're gonna have the things that we have taught people in the Zoom call is not like anything you've learned in the market before. It's not technical analysis. It's not your same old. It's probabilities. It's like, what's the probability of the market being bullish? Probability of the market being bearish under certain conditions. It's like, it's all stats. So it's like your true edge is lining up all the odds when they stack in your favor. And so these are like, what are the statistics that a monthly red candle will retrace a third? And it's like, okay, the realizations that we give you in that Zoom call, there's all kind of graphics to go with it to show you, is that there's a probability that's assigned with like, the most probable way to make a trade is to always long the market, the best that you can in every capacity. So right now I'm chasing a long. When the long setup is there, I chase the long, and we got the long setup. I chase the long. I bought some more, and now I'm in the long. Why am I not shorting this today? Well, there's a rule we cover in that class, right? Is that while bear zone is one of my favorite shorts to take, if this number disagrees with it, I don't take the short. But on the long side, that's my favorite long to take. If that number agrees with it, I take the long. If that number doesn't agree with it, it's not like the short. I still take the long. I'll long even when I don't have the confluence. I'll just change my position size. So like this is the kind of stuff we go over. Is like where I long and short and how much I do it. And the trick is how much to bet. And that's what we kind of go over. Can we use the backtesting? I'm going to backtest some strategies. We don't have a backtester yet built into the platform. But with like this new revenue drive, you guys that sign up and support it, we're trying to get another 6,000 a month to hire 2 new developers. And then we're going to build backtesting and probabilities written on the platform itself is the next step. So like 60, 40, like have the probabilities just kind of written there. That'll be the next. And then the guides, like I will put like here, it might say on the short, I might have the word here like none. Long, I might have the word normal. Maybe I won't say short and long, so it looks like a trading advice. But like I'll have guides on here that remind me like how big I like to trade. And make it like programmable for everybody's own rules. And then it reminds you on the chart what your rules are. You know, come like preloaded defaults with my rules too. No futures trades on this one today. Choppy. Anytime markets are choppy like this, I like to all or nothing it on options. I don't like to trade the chop. Especially when drawdown's present. I like to take a nice clean setup. Ratio greater than half means that is a more probable move. Problem is QQQ is very close to its retrace, and QQQ is the one driving the boat today. So if QQQ hits at 465 and returns, that's kind of the problem. I don't want to short it though. The S&P has the cleaner monthly map. It's cleaner. It's bullish. The problem with this is not trending higher. This is like a coin flip. We're going to be sitting here, and this is watch. This is how it's going to work. Watch. We're going to be sitting here, and then either it's going to do that like very rapidly, or it's going to do this very rapidly. It's just going to be a coin flip. It's not even going to mosey its way up there. That's the problem. The hard Nasdaq resistance sitting here. VIX is completely decaying, which is good. These V's are going to be smaller. I like it. DD band is a pretty strong resistance there. 465 impact and run length red line. It's illiquidity pivot technique. Everyone here calls them red lines. The problem is this is the intraday resistance. So to bet that it breaks is the rare case. It's not the strongest bet to bet long today. But it's still a good bet. It's just not the strongest. You got all kind of junk in the way. Resistance is in the way. And Nasdaq is trying really hard to break through the TD band. Though this is the one resistance that we have to. That's where I'm telling you it's like the coin flip. This thing either dies or it flies. It's not, this isn't a mosey. From here, it's a die or fly. It's going to be quick. So when you break DD and you have irrational markets like this, you never really have the market mosey on further. It's I like to call it die or fly. It's like a coin flip from here. You put a gun to my head and tell me the stronger signal is slightly the bull signal on the greater push on SPY. QQQ still has that resistance. So it's not going to fly and like retrace any further than pretty much wherever that retracement is. So like once it hits it, I'm not going to do anything else till the end of the day. I still think we trade down, even if we do retrace. But if we do retrace it today, there's no shorting off of it today. If we hit it today, I'm just going to let it go. I'm going to let it go till the end of the day. It's a dire fly. This is the problem here is that this is a... Everything's tight right here. You have, and again, I could be wrong. Be humble about it. You have, by proxy on the S&P, have SPY hedge pressure here, giving it support. I always chase a SPY hedge break, always to the long side. The SPY about this area has support. You have DD resist. On Qs. That's the problem. In Q. You have NASDAQ also has a bearish monthly map, and SPY's got a bullish monthly map. And when you ask yourself who's usually the winner of the fight, believe it or not, the S&P is usually the winner of the fight. If you were to take a probabilistic bet, and actually we could talk about that in today's lesson. SPY being more diversified is more of like a buffer to fight off volatility than just NASDAQ that's not as diversified. Tech could be doing terrible, but that's because people could be rolling out of tech and rolling into financials or something, right? So normally, actually we can look at the sectors right now and see if that's happening. Good call, Matt. Let's see if we're getting roll off from one to the other. Yo, Spider changed their site. Look at that. I like it. It looks a little nicer. You look for like moves, like energy and financials are not part of the NASDAQ. Technology, healthcare, telecom are all part of the NASDAQ. So this is like, they're part of both of them, but healthcare, communication, technology is like the three biggest components of the NASDAQ. The parts that aren't part of the NASDAQ, energy and financials. So as you see, people are rolling out of energy and financials, and tech is strong today, and comms are strong today. Comms can be like Apple and, you know, like Meta, social media, Apple phones, AT&T, T-Mobile. So like those being strong, and even the roll off out of energy and financials aren't that weak. So these are actually relatively strong today. So we're seeing a little bit of sector rotating into the weaker spots of the NASDAQ. So you put the 2 and 2 together, NASDAQ being the weaker of the two indices, the components of the NASDAQ are the strongest of both indices right now. So it's the idea is that if you were to take a bet between the S&P and NASDAQ, the bet that I would take on is to the upside, just because the roll from diversified to risky, right? Like you're like NASDAQ's a riskier index, is less diversified, is stronger. So essentially, like if people were running out of tech and it was down 3% and going into energy, it was only up 2%, I'd bet that the market would be falling down. But people are just barely rolling out of finance and then rolling big into tech, which is what's going to push the NASDAQ the hardest. And NASDAQ is actually the weaker of the indices. So it's saying that like while there's like a lot of resistance, NASDAQ might find the power to push it through. But like I said, this is a hard bet. It's not going to be an easy bet. Like I said, it's a fly or die kind of thing. I don't know. You got two really tight resistances here. This one's to push down, this one's to push up. I don't feel confident right here. But it's like say dire fly. It's gonna move super quick if it moves. If it flies, it's not even gonna give you any hint that it's gonna fly. It's just gonna fly. Tracements that are this close, it likes to just get it out of the way. It's gonna like bear trap some people if it goes and then pick up and then close strong and green for the day. We had two red candles in a row. Candle count usually, you know, red candle, green candle, about one for one candle in a bearish market. So we've had two really strong red days. No volatility strikes today. I'm betting on a green day. We're so close to the retracement. I'm just betting on it fulfilling by the end of the day. We'll see. The Discord invite link is dead. Wait, which one? What? It shouldn't be. No way. No. Worked for me. What is it saying when you try joining? You do this one? You might already be joined. That's the thing. Unable to accept invite? You're probably already in the Discord. That's probably why. Just go to the probably. Send me an email, matt@rocketscooter.com. Send me an email with your Discord ID. I'll make sure that, like, for whatever reason you're not like auto timed out or auto banned or something. We have lots of bots on the channel that remove inactives or purge people, or who knows. It's been a long time, so you probably just missing some roll or something. Insurance names are running hard today. Fly or die. It's like, what do we bet? I don't usually bet that DD bands break to the upside, but we're so close to the finish line. I just don't. Yeah, it's like not the strongest bet to bet on the long side here. Your fly or die. Let's see if we got anything on this one. Here. You're in. Awesome, dude. Wait. That's all just gonna be quick. Here's the die. Resilience is still negative. I think of some, yeah, so it's probably not the strongest move anymore. But we'll see. We'll see. We'll see. Oh, we're so close to that retracement level, like super close. told you, fly or die. It's quick. It's a small options trade, so if it pans out, it pans out. If it doesn't, it doesn't. There's the quickie. Not like I'm betting the farm on this or anything. QQQ is still pretty nasty on the monthly maps. That's the problem. That's probably it. All right, guys, we got 12 minutes left on the show. Anything you guys want from me? I'm hanging on. It's a ride or die sort of trade. So I'm not really too concerned if it doesn't play out. I just basically playing with the profits that I had. If it does retrace, that'd be huge. I'd love it. We're kind of in that weird chop zone. This is that. Remember, I showed this is the what we call the fly or die case, and it's just a dice roll. And the luck doesn't go in your favor. Luck doesn't go in your favor. It's totally cool. Like I said, I've got the bet. We do finish the retrace, so we'll see if I get anything off it. I'll probably play around the position a little bit. Any more questions for me before I get out of here? 10 more minutes left. I gotta run. Not a lot of volatility triggers though. So again, I don't like what I see. The price action is kind of funky. Zoom is gonna be at 3 o'clock Eastern. In touch futures today, choppy moves like this. I don't like to really play on futures. I like to get a good solid move. So, nothing on the futures front. Full zone support on Qs today. DD ratio is still greater than half. It's decent, but DD band is a really strong resist, and that's kind of one of the things that you have to kind of take note of. This is a really strong resist, so. Okay. Okay, guys, I'm out of here. I'll see y'all in a little bit. Blue lines and futures, how I use it open? Oh, yeah, so they're just pivots at open. Like, I usually, I'll trade into them and usually close out a position if I'm in a trade. So, like, here, it's kind of, like, all jumbled up together. So, it's not really the best example. But hedge pressure to hedge pressures are always pivots as well. They add confluence to your traditional liquidity map. So, if you have, like, bullish liquidity map, then you have a pivot to trade into or off of. So these futures dynamics, which are here, here, and here, are additional lines that you can draw on your chart to like, okay, these are other pivots to trade off of. Superman, is that you? Clark, I have Kryptonite. What up? Yeah, no, I don't think we get a major rally at all. No rally back off of this. The market's pulling back for 2 months. That's what we already talked about. You guys head over to the Discord. We'll see y'all later. Check out the link. Do you like the new Call of Duty? It's not bad. I mean, I didn't play the old Call of Duty, so I never really played Call of Duty. But it's actually not bad. The beta was pretty fun. It got repetitive though, so I hope like the other modes like Warzone and stuff. They're gonna have Warzone for this one, right? I kind of more like those kind of style of play instead of the small maps. But it actually was pretty nice. I think on a competitive sense, the maps will be very good. The beta was just like randos running around with no sensibility, so it didn't really feel like. I mean, I used to play Counter-Strike like all the way back 1.6 Source. I played all the Counter-Strikes. I didn't play except for Go. I didn't play CS:GO, but I played the other two, and so I like when it gets a little serious and gets competitive. I think Call of Duty will be pretty fairly competitive. The maps are designed pretty well, I think, at least in the beta. That's pretty good. All right, guys, I love y'all. I'll see y'all later. Don't forget, Zoom call at 3. We'll have a lot of fun in that one. I've been covering the 20 days of profitability mindset. Basically, it's a way that shows you that there's a magic number called 20 in the stock market. 20 days has a very hefty significance. There's a lot to it. Part of the reasons there's 20 trading days in a month, but other reasons to it as well. And it basically says if you can survive 20 days with half of your account intact, that's statistically speaking, if you risk half of your account every month, just randomly trading, this is just statistics, you're not going to really do this. If you risk half your account a month and you somehow survive 20 days without losing more than half your account, and then next is another half and another half, you'll never hit it zero, number one. But the second part is if you can survive 20 days and keep half your account intact, you're on the right path to profitability. Statistically, if you just close your eyes and long the market randomly and you have half your account left at the end of the month, we did a case study that proves you ultimately make money. That's kind of what your 401k does. As the market dips, they continue to buy, but never risk becoming insolvent on the way down. So the idea is that you take this similar approach as you stack up your odds. You're like, oh, I didn't know that over time, it's just better just along the market. That's just a generalized piece of like the hundreds of things we're going to teach you. But when you start stacking up all your odds, you realize there's certain kind of trades that are just better than others to take. And there's a certain methodology that if you can last 20 days with at least half your account, clearly you want a lot more than that. You don't want to lose half in a month. But if you can, it means you have what it takes. You just don't know how to bet. Nobody's properly taught you how to bet in the market. And that's what this is supposed to be. It's to shape you, and then the lessons also 20 days worth of lessons. To shape you into thinking about how to bet properly in the market. The reason that poker players win is not because they get lucky flops of the cards all the time, and that's the reason that somebody gets first place instead of fifth place in a tournament because of the luck. But everybody bets really well against the odds that are in front of them. And we teach you how to see those odds, and it's very comprehensive. It's not like subjective class. It's like when you see this, this is the odd. When you see this, this is the odd. These are probabilities. And people are coming out of there saying like, I never thought of the market like this at all. We made it, and to be even fun, we even made it $20 to join the webinars. 20. I want you guys to all sign up for it. The link, I'll post it really quick in the YouTube channel. This is by far the most important thing we've ever shared. And it's my odds, like my statistics that I have. Like the probabilities that I use when I trade. Like this is the probability this happens, this is the probability that happens. This is why I short here, this is why I don't short here, this is why I long here, this is how much I long here. Each one of the legs of the liquidity map comes with some numbers, probabilities and amounts.